Howdy, folks. Welcome to Liberty Call. Today is Monday, March 18th, 2024. Hope you are having a fantastical day out there. It is a beautiful day here in Colorado. Sun's out. Hopefully, it's going to help melt the feet of snow. I said feet, not foot. Feet of snow we have outside. So it is starting to kind of compact and melt away, but it is a mess out there. I foresee flooding in our future very, very shortly here in the Mountain West, I guess we call this part of the country. So anyways, like I said, hope you're having a good day out there. If it is your first time watching Liberty Call, if you could do me a favor, could you give me some thumbs up, a like, a share, a subscribe, a follow, press the notification bell. And it looks like the markets in here domestically were pretty good. Let's go and jump over and take a peek there. The Dow Jones was up 0.2%, 75 points. It was up a lot more earlier in the day, closed at 38,790. The S&P 500 was up 0.63%, closed at 5149. NASDAQ up 0.82%, closed at 16,103. The VIX fell 0.56% today. It's at 1433. Canada down 0.05. Brazil up 0.17. And Mexico up 0.3. In Europe, Germany was up 0.01, so basically flat. The UK down 0.06, France down 0.2, the Netherlands up 0.23, Spain down 0.01, Italy flat at 0, Switzerland down 0.45%, and Portugal up 0.65%. Russian exchanges were mixed today. The MOEX down 0.11, the RTSI up 0.92. And the Asian markets, the Nikkei in Japan was up 2.53%, Australia up 0.07%, New Zealand down 0.26%. In China, the Shanghai was up 0.99%, the Shenzhen Component up 1.46%, China A50 up 0.57%, DJ Shanghai up 1.02%, Hang Seng up 0.1%, and the Taiwan weighted 1% even. All right, so kind of the Asian markets and the U.S. markets are pretty good. The European markets kind of So anyways. All right, let's jump over to the weekly economic update and see what it has to say. Stocks fell for a second straight week on inflation concerns, despite a report on consumer prices that was initially well received by investors. Tuesday was the only bright spot during the week as stock prices rose after the Labor Department showed the consumer price index rose 3.2% in February compared with a year earlier. It was a bit warmer than economists expected, but cooler than investors had feared. The news sparked a day-long rally with the S&P 500's stock index setting its 17th record high of the year. Following Tuesday, caution lingered as investors parsed the underlying data behind the headline consumer inflation numbers. Thursday's fresh producer price index report showed that wholesale prices increased by 0.6% in February, more than the expected 0.3% increase. Additionally, core PPI, excluding food and energy, was hotter than expected. Retail sales also reported on Thursday were disappointing, rising less than expected and adding to the inflation angst. The news rattled investors and contributed to stocks closing lower for 3 consecutive days to end the week. Let's see here. Broadening leadership. Unlike the prior week when the S&P 500 fell the least, last week it lost slightly more than the Dow, but less than the NASDAQ. That performance pattern suggests market leadership may be broadening. Also, the energy, financials, and materials sectors also posted gains last week, showing that other groups may join in the tech-led rally. Well, what I think actually was happening was people were running to commodities because the tech market, due to interest rates, was kind of shaky late last week. Let's see here. Economic data this week. Monday, we have the housing market index. Tuesday, we have the FOMC meeting, which will last 2 days, tomorrow and Wednesday. Also, housing starts and permits and the 20-year Treasury bond auction. Wednesday is the FOMC announcement, where I imagine they will announce nothing. The Fed chair press conference and the EIA petroleum status report. Thursday is jobless claims, existing home sales, and the Fed balance sheet. Companies reporting earnings this week. Tuesday, we have GameStop. Wednesday, we have Micron Technology, General Mills, Five Below, and Chewy. My dog loves Chewy. Thursday is Nike, FedEx Corporation, Lululemon, and Darden Restaurants. And that is the weekly economic update, folks. Pretty exciting stuff. I know you're probably on the edge of your seats, just like, wow, this is amazing information. Where does he find it all? Magic. All right, let's go to the market recap. SP 500 closes higher as tech jumps ahead of Fed meeting. Now, for those who were expecting the Fed to do something, again, I mean, it has been telegraphed for months, well, at least definitely weeks, with a lot of the inflation reports and just economic reports that have come out. So, it would be shocking if they lowered rates or did anything at this meeting other than just evaluate the numbers and we're paying attention to the future. All right. On Monday, the SP 500 closed higher, driven by gains in the tech sector as investors focused on the upcoming Federal Reserve meeting and its implications for interest rates. Concerns over recent inflation data indicating persistent high inflation rates have led to speculation that the Fed might revise its projected rate cuts for the year. The Fed's two-day meeting starting on Tuesday is anticipated to result in no changes to interest rates. However, recent inflation trends have raised doubts about the previously projected 3 rate cuts for the year, with expectations now leaning towards possibly only 2 cuts. Well, if inflation rears its ugly head, like some folks have forecasted, rates could continue to go back up this summer, not down. Jefferies analysts predict a modest adjustment towards 2 cuts in 2024 and the subsequent years, with a slight increase in rates across the curve. Tech giants Apple and Alphabet's Google unit are reportedly discussing a partnership, with Apple considering integrating Google's Gemini generative artificial intelligence engine into its iPhones to enhance AI capabilities. Meanwhile, Tesla saw a 6% increase after announcing a price hike for its Model Y EVs in select European markets, alleviating concerns about demand amid heightening competition. HashiCorp Inc. also surged 8% following reports of a potential sale. What is HashiCorp? Let's Google that real quick while we're sitting here. HashiCorp is a empowering developers everywhere. That really doesn't say much. Company with freemium business model based in San Francisco. HashiCorp provides tools and products enable developers. Okay, so it's for developing software. Okay. Anyways, I hate talking about something if I don't know what the hell it is. All right, so that was up 8%. Following reports of a potential sale. Chip stocks remain steady as investors awaited NVIDIA's GTC conference in San Jose, California. The conference is expected to unveil NVIDIA's latest flagship chips tailored for AI development. CEO Jensen Huang's keynote address is anticipated to introduce the rumored B100, NVIDIA's next-generation AI chip, with demand expected to outstrip initial supply capabilities, according to Wedbush analysts. All right, so that's today in the markets. One last article here. This comes from our friends over at First Trust, Mr. Brian Westbury's Monday article. This one is focused on the Fed. Let's see what he had to say. As the Federal Reserve prepares for its meeting this week, investors and analysts eagerly anticipate clues about future monetary policy decisions. Speculation revolves around the timing and extent of potential interest rate cuts or pauses in light of recent inflation data and economic indicators. While market focus remains fixated on Fed actions, some voices caution against this preoccupation. They argue that attention should shift towards more fundamental drivers of market valuation, such as innovation, entrepreneurial activity, and corporate profitability. Well, I think the profitability I would stick with, but things like innovation and entrepreneurial activity don't affect bottom lines. So I would focus on, how profitable companies are, they paying dividends, things like that, things you look at to see if a company actually is worth investing in. Comparing market expectations from January to now reveals a notable shift in sentiment, initially projecting 6 rate cuts for the year. Markets now anticipate only 3, reflecting changing perceptions influenced by inflation reports. Recent consumer price index data indicate a 4.6 annual increase in consumer prices, with even the super core inflation measure rising significantly. Despite inflationary pressures, there are signs of economic slowdown evidenced by tepid retail sales and industrial production figures. The discrepancy between rising prices and sluggish economic activity poses a challenge for the Fed in its pursuits of its 2% inflation target. Observers await clues from the Fed regarding its stance on monitoring the money supply and and whether it will adjust its inflation target. However, any significant policy changes are unlikely in the near term, given concerns about credibility and potential market reactions. The advice to investors is to heed the Fed's announcements, but to avoid fixation on the short-term policy shifts. Instead, attention should be directed towards understanding the underlying productive capacity of the economy, which ultimately drives long-term market performance. Yep, good stuff. Brian is very, very bright. All right, well, that is everything I had for today. I hope everyone is excited for this week. March Madness starts, well, the real tournament starts on Thursday. My Cougs are a #1 seed for the second year in a row. Let's hope they do a little better than last year. And even though they kind of threw up a stinker on Saturday in the conference championship, but the game didn't really matter in the grand scheme of things. But anyway, so like I said, hope you're going to have a good week. If anyone needs anything from me, please go to, here it is, DSAFinancialGroup.com. All my contact information is there. I hope you have a wonderful evening, and I shall talk to you next time. Adios.